Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is Saturday. It is July the 3rd, which means tomorrow it is Independence Day in the United States. So happy Independence Day and happy 4th of July to all my US friends and colleagues and peers and family and everybody else who might be watching this video. What we are going to do today is take a quick look at earnings on deck, and specifically energy earnings on deck, because obviously I am still Mr. Oxy, and we need to keep track of who's doing what and what's happening in the earnings season coming up, because it is the end of the second quarter and we are in the beginning of July, and we are going to see some energy majors and super majors reporting earnings coming up real soon. So what I did was I sort of selected a top 10, but it doesn't mean it's the top 10 favorite energy stocks for everybody, but there's a really good chance that some of the stocks that we talk about all the time will be featured in this video, which is energy earnings on deck. First one we're going to talk about is Schlumberger. Schlumberger earnings date is July 22nd. By the way, they're not ranked in the top 10 from 1 to 10 or 10 to 1 or anything like that. Neither are they ranked alphabetically. I just ranked them by earnings date. So the first one coming up in my top 10 today is Schlumberger, reporting on July the 22nd. We're expecting 26 cents as an EPS. That's the consensus forecast. And last year, obviously, we all know what happened in 2020. The EPS for the same quarter was negative $2.47. If you look down at the big red circle at the bottom of the screen, it shows you that Schlumberger has actually missed analyst expectations quite significantly on a couple of quarters that they reported. But right now, on the right-hand side of here, you can see TopRanks is ranking Schlumberger with a smart score of 8, outperform. So they're saying this is a buy. To be fair, almost all energy companies are a buy, because energy is going up in terms of the price of oil and natural gas. And most of the energy majors, super majors, and maybe your favorite energy company is still trading way below where it should be trading under normal circumstances. Number two, coming up next would be BP, British Petroleum, now just called BP, will be reporting on July 26th, and we're expecting 57 cents earnings per share. Last year, for the same quarter, was negative $5.01. What a turnaround that would be. But also, again, in the red circle, you can see that BP has actually missed quite significantly on some quarters, and this was Q2 of 2020. Yet right now, TopRanks has BP also with a smart score of 8, outperform. Next one is Royal Dutch Shell. So maybe just to reverse the sequence a little bit, smart score is only 6. They're neutral. The analysts are neutral on Royal Dutch Shell, RDS. They are reporting on July the 28th, and we're expecting $1.08. And last year, much like BP before, negative $4.67. But you can see that there was also a massive earnings surprise in Q2 of 2020 as the coronavirus pandemic hit, and energies stocks took a huge tumble. The next one is one of my longs. In fact, it's one of my longs, because I've been in this position for quite some time. TotalEnergy out of France will be reporting on July 28th as well. Their consensus forecast is $1.14, and last year, comparatively, compared to the previous two, they didn't do too badly. They were just negative $3.25. Of course, you have the same kind of earnings surprise there, but overall, if you look at the expected earnings and the actual revenue and earnings per share generated, this is earnings specifically, you'll see that Total pretty much performs in line with analyst expectations, with the exception being Q2 of 2020. Much like two of the ones I've mentioned already, Total right now on TopRanks is a smart score of 8, ranked outperform. The next one, Exxon Mobil. Exxon is obviously one of those super majors that many people in the United States are invested in, especially for longer-term investors who are looking for the dividends that they earn on Exxon. Exxon is one of those dividend blue chip stocks. They will be reporting on July the 29th, and we are expecting about $1. And last year's EPS, unlike the previous ones I just mentioned, was only negative 28 cents. But you can see that even though Exxon is typically reporting more or less in line with analyst expectations. Q4 of 2020 was a huge surprise on the downside, but right now TipRanks has Exxon ranked 7, neutral, so probably a hold. Enbridge is another one of my longs. It's one of my foundational stocks in my energy portfolio. They will be reporting on July the 29th. This company is headquartered in Canada, which gives me a little bit of an additional or added diversification. We're expecting 46 cents. That's the consensus EPS, and last year's EPS was 66 cents. So you can see there was a bit of a drop-off in Q1 of 2020, but for the most part, Enbridge is one of those stocks that actually reports sort of on the upside, beating analyst expectations quite consistently, with the exception of this one little blip in Q1 of 2020. TipRanks has Enbridge 10 outperform as a ranking. I've been in this stock for a long time, and as I said, it's one of my foundational stocks. And one of the reasons why I hold Enbridge is not only because it's such a consistent performer, but in addition to that, it is the natural gas utility for the province of Ontario, where most Canadians live. It is also a pipeline operator and a diversified energy company, and pretty much the ultimate absolute blue chip in terms of Canadian energy stocks, even though there are many other good ones as well, like CNRL, Suncor, etc. So, but Enbridge certainly one that I've been long in for quite some time. How about Chevron? Here's a bit of a surprise. So Chevron will also be reporting on July the 29th. We're expecting a $1.50 or $1.50. Last year they came in at negative 446. This is not too extraordinary because we've seen that from some of the other majors and super majors as well. Few downside surprises here. This is Q4 of 2019, and this one was Q2 of 2020. TipRanks consensus right now has a smart score of only 3, ranking Chevron as an underperforming stock. I know some of the people on the channel are long Chevron, so maybe you can share in the comments what you think about that particular ranking there. ConocoPhillips is one of our favorites as well. I don't have a position in ConocoPhillips, but people mention COP or COP to me on a regular basis. They'll only be reporting on August the 2nd, which feels like it's another 3 years from today. And we're expecting a consensus EPS of 95 cents compared to last year's 24 cents. Pretty good performance all around. You know, a bit of a mix in terms of beating analyst expectations and coming in negative. You know, the early part of 2020, Q1 and Q2, we can almost ignore because it was such an enormous change and impact to the energy industry when they told us we're all going to be, you know, at risk of contracting COVID-19, and you know, there's going to be millions and millions of people dead, and everybody should stay at home and all that kind of stuff. You know, I don't want to minimize the impact of COVID at all, but at the same time, man, they milked this for all it's worth, because most of the things that they told us was going to happen did simply not happen. ConocoPhillips on TipRanks is a smart score 10, outperformed, great ranking. Occidental Petroleum will only be reporting on August the 3rd, and the consensus EPS right now, excuse me, is a loss of 14 cents. Last year was negative $9.12. Now, for the people who've been following Occidental, we know that there were some serious impairment charges and depreciation charges and sort of non-cash entry type charges related to this significant underperformance. And the primary reason for that is that Occidental was forced to sell some of its assets in order to reduce some of the debt on its balance sheet. Anytime you are forced to sell some of your assets, you are probably selling some of those assets at bargain basement prices. And as such, you are incurring write-downs in terms of what the actual asset value is. Today, Occidental is obviously in a much stronger position, not only because they have started paying down some of the long-term debt, but more importantly, because they are still drilling and producing more than 1 million barrels per day, with WTI at around close to $70 for most of Q2. So the free cash flow generated was huge, and Occidental will be able to not only post better numbers, but also knock a big dent in their long-term debt. given the free cash flow that they are generating. So right now, TipRanks has Occidental Smart Score 6, neutral. Most of the analysts, and there's 17 analysts covering the stock right now, that TipRanks is tracking, would rank Occidental a hold. As you know by now, I'm also holding the stock. I have one of my largest energy positions in Occidental. In fact, my 4 largest positions in energy right now is Energy Transfer, Occidental, Total, and Enbridge. Talking about Energy Transfer, they will only be reporting on August the 10th. This is turning out to be quite a win for us. And once again, thanks Bulldogs #1, because not only did your team win, proving to us all that Bulldogs are in fact #1, but you are also a phenomenal stock picker, because it was Bulldogs #1 who initially said, Mr. Oxy, take a look at Energy Transfer. And I said, I will. And then he said, no, you really need to take a look at Energy Transfer. And I did. And I opened a position in energy transfer, and I've added to it several times since then. I think probably 3 times. We're expecting a consensus EPS for the analysts are of 27 cents compared to last year's 13 cents. You can see that their performance is more or less in line with analyst expectations, except for this huge outperformance in Q1 of 2021. And you know what? This may repeat itself again for Q2 of 2021. Right now, TipRanks analysts have Energy Transfer with a smart score of 10 also outperform. This stock, Energy Transfer, has quickly moved from being one of my smaller positions in energy to one of my larger positions in energy. And in fact, right now, as I speak to you, it is maybe second or third largest. I think it's the third largest energy position I have. But it's certainly, from a personal energy portfolio point of view, it leapfrogged Total within the space of just a couple of months. And boy, that was a good move. Thanks again, Bulldogs #1, because Energy Transfer has been really good to us. I want to leave you with this. This is a quick graph of uranium through the years. And the guys who created this graph here sort of categorized it in 3 different stages. They said the emergence years, because uranium only started being used as an energy source of supply. I think it was 1948, but anyway, you can see on the blue line over here, there are a couple of peaks, some very deep valleys, but we've had 3 major peaks over the last sort of 50, 70 years or so. Most people who are bullish on uranium feel that we're in the sort of scenario of another bull case, and we expect this blue line to sort of edge up to more or less, kind of where my pretty face is right now. In other words, the bull case, or the bull thesis, is this is another spike that's coming down the pipe. What's interesting about this is, if you look at the spot price of uranium, it's only down here sort of at $30 right now. But if you look at the previous peak, it was at 120, and the peak before that at 160. This is per pound. So if you get one of those peaks again, this is going to take off. Of course, if it doesn't happen, too bad. But right now, uranium is definitely a potential bull market. It is super cheap, but here's the reason why. Currently, in more than 12 countries, 71 nuclear reactors are currently under construction. 165 are planned and 315 are proposed. China plans to spend 2.3 trillion to expand its nuclear power generation by 6,600%. Demand side growth in new nuclear reactions continue to grow, with first fills for the new reactors requiring 3 times the uranium upfront as annual burn. That's the bull thesis. I'm not sure how many of the people who follow me on this channel and who are members of our community are invested in uranium, but you can kind of let me know in the comment section. And then, of course, at the same time, if you think the bull thesis is a little bit overstated, or we're getting overzealous in terms of where we're at for uranium, you can let me know about that as well. And then we can discuss that and kind of decide together whether this is something that we want to be in or not. But guys, I just shared 10 energy stocks with you, and then the sort of macro bullish thesis on uranium. You can almost, I don't want to get ahead of myself here, but you could almost put these up on a dartboard and throw a few darts at them and pick the ones you want to invest in. The only one that was kind of a little bit of a shocker to me when I looked at the tip ranks ranking was Chevron. I did not expect it to be at a 3, underperform. Not at this time, so that'll be interesting. But anyway, you guys are all energy investors, and we're all part of a community here in terms of people who are invested in energy, who want to make sure that we join this like-minded community and help one another achieve some good returns on our investment. It's a happy note. Happy thanks. Sorry, I almost said Thanksgiving. Happy 4th of July, Independence Day for all the US people watching. And this is Mr. Oxy signing off on a happy note. Talk to you soon. Bye-bye.